Sure. So when you think about, why a venture fund exists, is the goal is to make money. And we're looking to the way that you can make the most money is by going after the largest market opportunities where large exits are possible. So large market opportunities from a very general logic is that if you're going after a really big market, it means it's going to be easier to get to a larger dollar amount for revenue. And it also means that by the time a company is buying you, either early on in your life or later in the maturity of the company, if you're going after a really large market, then a buyer can buy you, and there's still a much bigger growth potential for that buyer to grow into. And so they're willing to pay even more money for you if you're not like flatlined in maturity, but there's a bigger thing you can grow into above and beyond that. Because from a buyer's perspective or even an IPO's perspective, that's day one. And so you want to know there's even a bigger market above and beyond that you've just kind of grown into. So understanding, I think, just the perspective of what actual big means is something that a lot of times first-time founders, even first-time VCs, I think don't have a really good appreciation for what is big. I think the human brain struggles with kind of thinking in scales above 6 to 9 zeros. Everything's just big. And so it's actually understanding that there is scale that matters, that's different. And so from a high level top down, before we go on the bottom ups conversation, top down, we're kind of looking for, in general, market opportunities that are at least 10 billion or more. And that the basic logic for that is that if you take 1% of 10 billion, you get to 100 million of revenue. And at 100 million of revenue, if you sold for 1 times revenue, you'd sell for $100 million. And if we're coming in at like a $10 million valuation, there's potentially a 10x return there from 10 million to 100 million if you sell it at a 1x. If you get to 100 million of revenue and you sell for 10 times revenues, it's more like a SaaS platform, then you're selling for $1 billion. And again, that's kind of getting us a 10x to 100x return opportunity. So at a very basic level, the minimum thresholds that we're looking for as a seed Series A investor is a 10x or greater return. And you can really only get there if you kind of can hit a minimum of 100 million or more of revenue. But in order to do that, to have like a rational or not a more conservative market penetration, is 1% market penetration of 10 billion. But what I'd highlight is that is the minimum market size that we're shooting for, because anything less than that, it starts getting harder to get our minimum return threshold.